Welcome to the Big Biz Show.
Taking care of business.
You want fast-talking, hard-hitting discussions on business and finance? Maybe with a barroom slant and some really salty peanuts? We're not counting calories. We're counting cash. Before we get to the man with the financial plan, meet the money team. Costa, Mary, and Greg. Now Captain Finance himself, Sully.
Wherever you're watching, wherever you're listening, big old Happy New Year to ya. Back in the saddle, as they say, from the Loft 100 Studios, sunny Southern California. Costa, Mary Bird Godwin, Greg Todorov, our executive producer, Sully.
And let us not forget the DTT, the Day Trader Trio's with us today.
Best in the business.
You guys have a good New Year? Yeah?
Absolutely.
That is, with me there, we have 40% of Sullivan.
Yes.
And we got some exciting news about tours this year.
I know. The poster, the lineup for the Beach Life Festival is out now.
When is that, May, March?
May 2nd is when Sullivan's performing the same.
With
Shut
Lenny
the front
Kravitz.
door.
Lenny
Really?
Kravitz
Ooh.
and Diggable Planets.
Diggable
for
Planets?
the old school.
No way.
Yes. It's a really great
311?
lineup.
I am in.
311?
311. You know, Nick Hexum was at the Christmas party. Did you meet him?
No.
He was at the house Christmas party.
I fell
Nick
into
Hexum,
the
the lead
vineyard
singer.
like an hour in. I was so hammered, I just fell over your bank and
Yep.
crushed a bunch of wine.
Just got back, but we're very excited. Had a discussion with Rome, who had played his last show with Sublime. He's out of his contract after 25 years and now going on tour. And guess who may be?
Hello.
So you guys want to pitch in for your own flights and stuff, but we may be going on tour. So as we are into our second program of the new year, we'll get to Howie in a second. But two things. Did you do New Year's goals, resolutions this year?
I did not.
You didn't? Do you
Isn't that
normally?
funny? Sometimes I do. Yeah.
What about you, Mary? Do you?
I did not. There's too much
By the
going
way,
on in my
congratulations
life.
on 9 years
Hey,
of sobriety.
Thank you very
you.
much.
Wow. Yeah.
January 1, 9 consecutive.
Because Mike's been sober for what, 70 days?
9 minutes.
Not in a row.
Non-consecutive.
No,
Total.
exactly.
Oh, mine is
Exactly.
Did you? So did you make?
I did.
What did you do? Well, none of our business.
No. I have written a children's book, and
Are you serious?
Swear to God.
Awesome.
And I, in the process of now trying to get it published.
What is it called?
Big Blue Lou.
Big Blue
It's
Lou.
about a big blue rhinoceros who doesn't fit in.
I had no idea that you had that sort of creativity in you.
It's
You just
been
thought you were Funyun eating bacon bits, dipping mayo.
99.9% of the time I am, but there's those moments of clarity where you're like, wait, I've got a story to tell.
So what's the premise?
It's about a big blue rhino he's born the wrong color, and he thinks that he's going to be alone the rest of his life, and then he goes about the jungles in Africa, and he finds other animals who are also born the wrong color.
So it's part of your New Year's goals is
To get it published, yes.
What's his name?
I think I
Big
can
Blue
help you with
Lou?
Big Blue Lou.
Love
I
it.
can help you with that.
Love it.
I know you
Yes.
I think Chris Castillo, one of our producers here, is probably looking at Blue Rhino as the car care company who's going to be suing Mike or trademark. They're big purple blue.
They're actually a propane company.
That's what it is. Blue Rhino's propane company.
That's funny.
This is how Mike names the thing after a gas company.
It's about a rhino that had gas.
I put down. This is both inspiring to me and sad to me, because I put down goals every year. Okay. Mm-hmm. And I tend to complete all of them every single year. And every year, here's the sad part. I mean, I get all my stuff. Literally, I make realistic goals. Okay. The problem is I have the same goal, the one I didn't get. This goes back to 2019.
Little carryover.
Yep.
Can you tell us what it is?
It's a tough one.
Yes, it is kite surfing.
Ooh.
Oh.
So, Greg and I enjoy surfing, and are going to take a couple of trips this year, not only to Zihuatanejo, to Cabo, and to potentially, if I could get him, he will never go to Dubai, but there's a surf ranch in Dubai. But we are going to Palm Springs, and we should all go together. But kite surfing, so I was a competitive sailor for a long time. I've sailed to Hawaii twice.
Same thing.
Wow.
I would like to learn, because I know that I would like to learn to use that.
Yeah.
It looks
Parachute.
super fun,
Doesn't
but
it?
it just looks complicated.
Complicated.
There's lots of wires.
There's a lot, exactly. That's my point. Yep.
This program brought to you by Blue Rhino Propane. Also, look for Big Blue Rhino U.
wherever you're watching, wherever you're listening, it is the Big Biz Show. We're rolling on. Another beautiful week here in sunny Southern California. Very fun time inside the Loft 100 studios. As always, we appreciate you tuning in. I am Costa. The lady to my right is Mary Bert Godwin. Greg Pomeroy is our executive producer. That is Sully behind the bar, and of course, the best in the business. The DTT, and there's the Blue Rhino.
Not only made fun of because he was the wrong color, but his horn's been on fire since he was born.
Right.
Careful of that spark. Boom. I think you got something there.
Might have to do story time with Mike.
Yeah,
sure.
Oh, boy,
Bring that book in and read
that would
it to
not be
us.
creepy at all.
Take us back to a gentler time, Mike.
Yeah.
When did this idea come out?
This is easily.
If you're just joining us, Mike said
9 or
his
10 years.
goals for 2025 is to finish his children's book called Big Blue Lou,
Yeah.
which is about a blue rhino. We thought, well, maybe there's a trademark infringement because of blue rhino propane. Of course, Mike writes a book about a rhino,
Yes.
and
Because rhinos are my favorite animal in the world.
well, and plus you're
Yeah.
from a big boned
Kinda
tribe.
built like one.
You're from a big boned tribe.
Yep. Yep.
Those blue rhino is a gas
Horns been cut off.
company.
Yeah. But it was just it's been there, and then one day I finally said, okay, jerk, give up the dream or sit down and do something.
Okay, so you got
like
the
it.
plane taken off. You can fly the plane. How you? So what's
Yeah.
the story? So it's about a big blue rhino that's made fun of because he's the wrong color,
Yes.
and it's going to teach that it's okay.
And he thinks he's going to just grow up by himself, lonely. And then there's a kid.
Mike?
What's up? No, there's a kid who grows up as an orphan in Africa.
Okay.
Who's then he's allowed to go and live on his own because he's a grown man.
What's on page 2?
And they and they bump into each other. And then he goes to live with the guy who owns the game preserve in Africa.
Lost my will to live.
And he's also got anyhow.
I'm already.
Hey, yeah, I'm
Really good.
I'm saying for the publisher
Really
pitch,
good,
I love it. But publisher pitch me. 10, 20, 30, 10 pages, 20-point type, 30-minute presentation.
That's right.
If you're ever going to do a pitch deck,
Yes.
or it's called a PowerPoint, and I'll say this for the first time I have ever said this in public.
Yes.
When I was first cutting my teeth into the investment banking world, I did it because I was raising money for private companies through venture capital. And they'd come up with these 300-page business plans. And I got to know the gals at the front up in Menlo Park that would have to check in these business plans before they circulated through the office to see who was going to invest it. I said, what do I have to do to get my stuff to pop up faster? They said, if you did it in color and made it like 16 pages, I believe that my company was the first company to create what is now called a deck. Although we had no idea what we were doing. But I think because we went from 300-page business plans, I hired an art department. I spent $2,500 on 2 color printers, which you can buy for $86 now.
Oh, wow.
Right?
Yeah.
Art department, writing department. It was interesting. So, hey, listen, Howie Font is here to talk about this Trump bump, interest rates. So Howie, so the 10-year Treasury are up. 10-year is scary because mortgage rates are nearing 8% again. I thought this was going in the other direction, pal. What's going on?
Jeez.
Well, just before that, I'm filling out my 2025 bingo card. I did not think Mike's treatise on racial tensions was going to make it, but that's an easy win for the beginning of the year.
Fantastic.
Wonderful. Yeah, interest rates. What are those again?
So, well, I thought we were going in the other direction. Is mortgage rates up to 8% again? I thought we were going back down to the 2s.
So listen, this is almost without precedent. Usually, we talk about
We've been without precedent for about 6 months now.
Jekyll Island, and
Sorry,
we
say
have
that.
this whole-
Say, I interrupted. Say that again now.
No,
Without
no.
precedent, what happened now?
Almost without precedent, this hasn't happened. Usually, when we talk about interest rates, I talk about what happened at the Fed meeting. You talk about the creature of Jekyll Island, how the Fed's big and bad. And that's because when the Fed does something, the market follows it. It's such a huge force in the economy that when they issue new rates, all other rates follow. Well, now that's not happening. There's only one time this has happened for a very brief period of time, and that was in 1998 during the dot-com bubble. But right now, we see the Fed lowering by 25 basis points and the long bond, the 10-year, going up 110 basis points.
Which tracks mortgage rates, is long bond.
Yep, that's right. And mortgage rates are following, and they're
Well, Howie, before you tell us why, Let me bring up a graphic for you.
Yeah.
This will tell you exactly why. Oh, look it's the debt. It's the U.S. debt clock.
Not this again.
Howie, is this all happening because what?
Yeah.
Because we're pushing back on the Fed because we don't think we can pay that much debt back? Is that the idea?
I was trying to avoid the debt speech for one show, or at least wait until the second show of the year. But no, that's exactly right. I mean, what's going to happen is we're going to keep issuing debt. We're going to issue new treasury bills, which is what we're looking at here, all of the obligations that we have as a country. And at some point, people are going to say, I'm not buying it. You're going to have to pay me 10%, or you're going to have to pay me 15%. And we've been at rates that high in the 80s.
Have we ever seen rates moving so in antithesis or so opposite to Fed rates? Has that ever even happened before at this level?
No, not at this level, not at this scale, nothing like it. Germany tried something. Germany tried issuing negative rate bonds, so they wanted to issue debt and then give you less money than you gave them at the end of the debt. It was 10 years. It seems very, very silly. They had to buy it back because they didn't have enough buyers. Imagine that. I mean, what kind of investment?
Well, wait. So that brings the word failed auction into parlance. Right. So a failed auction would prove that the Fed has been wrong and the economy is a much deeper problem than we anticipated, right?
It would. It would say, hey, we do not think that the U.S. economy is strong enough to pay for what the Congress is spending, not enough to pay down the debt, and we don't have any belief that this is actually real and you can handle any more. So start paying down the debt.
Howie,
is signal that will be sent.
Have you seen any sort of movement within the market or actually with people, your cohorts that you talk with, about what Elon Musk and Vivek Ramaswamy are going to do with Doge when they get in, and if there's going to be any sort of effect positive?
Any sort of teeth is what you're asking, right?
Yeah.
Will this have any teeth to it, or is this?
I think there's a lot of skepticism because there's only three things really. I mean, there's a lot of discretionary stuff. There's a lot of meat there for good political headlines, and we're going to see things like, NIH funded treadmill for shrimp is and for monkeys is defunded. Country saved $17 million.
Yeah,
that'll happen a lot. But if you're not cutting defense, if you're not,
but Howie, listen, I agree with you. I agree, but those are altruistic. Let me tell you what people care about. Okay.
Yeah.
Paying their mortgage. Mm-hmm. Saving for retirement. Putting their kids through college. Those are the top three things that most working individuals that have children think about. And then once they get to figure out that the $250,000 it's going to take to put your kid through college, there may be another story here. The number one thing that this administration can do to resolve some issues here, because inflation is going to be, we've got inflation fatigue at this point, but we're used to it. These mortgage rates have got to come down because that's going to be that's the final tipping point, is it not? Because people are going to lose their houses pretty soon.
Yeah, I mean, we're not talking about interest rates for fun here, guys. I know I harp on it a lot, but you just said groceries, putting kids through college, and the mortgage. Well, interest rates, that's the mortgage. We were just talking about that. Student loans, that's interest rates. We were just talking about that. And inflation, which we've spoken on a lot about, and that's still... I mean, Trump bump, you can say all that, but core inflation is still at 3.3%.
Yeah, the market versus the economy, right?
That's right.
And so what do you think it's going to take for the chat here today? What do you think it's going to take for us to get to the point where mortgage rates and long bond is going to get to something reasonable?
Well, I think Mike actually asked a really great question.
What?
And Jeff Bezos actually was asked the question just a couple of weeks ago, and his answer to what you both have said is, listen, that's altruistic to try and really reform the budget. What's really going to have to change about this ratio of growth to debt is the growth side. So if we start growing at 5%, if we can push the economy into hyperdrive, then more of this seems workable. We can eat up more of this debt. We can have more tax receipts come in, and we can keep the cycle going a little bit longer.
Is this on the top of Donald Trump's list, or at least as people in his economic forum? Is this something that you dug out of the back pages of Market Watch, or is this something that's actually front and center and I mean, I saw it in the headlines today, but are they?
No, I mean,
they need
I
to
think
attack
it's
this
pretty
quickly.
clear. Yeah, no, I think it's pretty clear that to get through this major growth is what's needed. I really hope that's not government funded growth. If you subsidize or simply cut taxes, cutting taxes is a little bit different because it has a little bit of a multiplier effect. But if we just pay for, new factories to open, that's not as good as actually organic growth. So I really hope that the reduction in regulation can incentives in some way can really get the economy moving, and that'll fix a lot of this problem.
God, I like when Howie's making fun better. People with mortgage, it's time to, I want to refinance.
Not anytime
I made at least $65 on my house. I want to pull 63 of it out. Let's roll. Big, biz, go. More to come. See you in a minute. Loft 100 Studios, the Big Biz Show, and our affiliates and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any person, or that an investment in such securities will be profitable in general.
Given the nature of the company's profile and the lack of an active trading market for the securities, investing is highly speculative and carries a certain high degree of risk.
We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its hosts for the profile coverage.
From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stocks if we are speaking about interviewing or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer at sullyandgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully and read the investor information available at the websites on the
Securities and Exchange Commission at sec.gov and or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I like it.
Hey, is that a rescue plane?
It is the Big Biz Show. Loft 100 Studios, Southern California, having a great time. All right, thanks for being with us.
Nationwide, coast to coast. 125 million TV homes strong, and we just got our brand new contract signed by Bloomberg EU, Bloomberg El Financiero, Biz Television, American Life Network, and let's not forget American Forces Network in 175 countries and all the ships at sea. We are everywhere, every hour of every day. And we broadcast right out of sunny San Diego, California, Loft 100 Studios. Greg Tarnoff, our executive producer, Mary Bird Godwin, the financial little lady, as Mike likes to call her. I just hit a ball. I was golfing.
Pickleball?
I was golfing.
That's pretty good.
Pickleball.
Love it.
And Mike Costa, of course. Good to see you along. Dr. Jonathan Javitt, founder, director, chairman of the board of, and of course, chief scientific officer of NRX Pharmaceuticals, ticker symbol NRXP. One of my favorite people in the whole wide world, as well as a regular on the program, that introduced us to everything from akathisia to suicidality to ketamine over the course of the last year. And it keeps on getting better and better. NRXpharma.com, once again, the ticker symbol NRXP. And you brought up the fact that there was a press release yesterday. And
Dr.
Jonathan,
Javitt?
welcome to the program.
Dr. Javitt,
hey, Sully, how are you?
Great to see you, man.
A belated happy holidays and a happy New Year to you. Tell us, New Year's to you. Tell us about the big press release.
Well, a couple months ago, the board of the company asked me to step back in as CEO, and seemed like a good time to do that. So in the intervening couple months, we've tripled the value of the stock, and Monday announced that we've just brought in a new investor, highly respected family office, Smith & Sauer. Their background is in medical back office systems, and they're going to work with us on building a nationwide umbrella for Hope Therapeutics to make Hope Therapeutics the leading and really the first chain of medical facilities, of outpatient clinics focused on suicidal depression, PTSD, and enabling people to live productive lives. They're investing $25 million of acquisition capital that, combined with the banking relationships we've established, should give us the ability to do $100 million of clinic acquisition over the course of the next few months.
Amazing.
So it's been a pretty exciting week for us.
Yeah. Hey, Dr. Javitt, I've got there's going to be emails that always happen after you come on the air with us. Talk to us about the relationship between NRX Pharmaceuticals and Hope. I know Hope is part of it, but talk about the bifurcation, because it's not all one company.
Well,
it's really two companies.
A week ago, NRX Pharmaceuticals owned all of Hope Therapeutics because we invented it. And now, as a result of this new investment, Smith & Sauer will own a third of Hope Therapeutics. And as clinics come on board, as clinics become part of Hope, they'll also be owners. So over time, NRX will go from owning 100% of a blueberry to hopefully a meaningful percentage of a watermelon.
Oh, that's a great way to put it. Hey, real quickly, can we talk about the release that came out today about how you and David Feifel are going to present keynotes to, I think the name of the it's called Beyond.
The SACS Forum at the JP Morgan conference.
Yeah.
So, you and I have been talking since we met about the importance of ketamine and really the breakthrough that ketamine represents in reversing suicidal depression and PTSD within hours. But ketamine's not the whole story. You had a slide up just a few minutes ago showing the interplay between ketamine, transcranial magnetic stimulation, other forms of neuromodulation, because ketamine seems to give about a 50% response rate. It may be everything you need for some people, but part of what you need for other people. And the whole science behind Hope Therapeutics is to be able to take the results that Dr. Feifel's achieved, really as a global thought leader at the Kadima Clinic in La Jolla. And you've had Dr. Feifel on your show.
Sure.
You put him in your documentary, so you know all about the miracles that have been achieved at Kadima. And the objective of Hope is to make those miracles available worldwide.
The name of the company is NRX Pharmaceuticals, stock symbol NRXP. Dr. Jonathan Javitt, our guest, CEO of the company, as well as Chief Scientific Officer, Director, and really the man behind everything. What is the velocity of everything, in your opinion, in as much as you can talk about, because you're a CEO of a public company, you can't share us everything. But for 2025, talk to us about the first half of the year, talk to us about the next 18 months.
Well, the most important part of 2025 is we're about to bring in a presidential administration that, among other things, is highly focused on the need to do something about suicide and veterans and troops. I fly for the U.S. Coast Guard Auxiliary, and just last month, the Commandant of the Coast Guard stood down the entire Coast Guard for 90 minutes to focus on suicide prevention and stress resilience.
That's amazing.
Dr. Javitt, can you... Oh, I'm sorry.
Over the last year, we lost 14 shipmates to suicide. Wow. We dangled people off of cables on helicopters above frigid waters. We didn't lose a single shipmate to Coast Guard operations. 14 people to suicide.
Wow.
And that's far less of a death toll than you're seeing in Army, Navy, and Air Force. They have even higher suicide rates. So this is a national crisis. And an American dies of suicide every 11 minutes. And everybody in this incoming administration has focused on the need to approve and deploy treatments to prevent needless suicide.
Dr. Javitt, you will be hosting a meeting at, I believe, Mar-a-Lago. Is that correct?
Well, I just talked to you about why the incoming administration cares about this. And, as a result, a member of Mar-a-Lago asked us if we'd come and do an investor workshop there for members of Mar-a-Lago.
Can you talk about who could attend and so on and so forth at this point, Jonathan? Or is this still in the phase of?
Well, at this point, it's too late for somebody to get Secret Service clearance to attend this week's investor workshop. But There will be one the week of January 28th, but I can already tell you, Sully, that there's no way the Secret Service is letting you in there.
Yeah, you knew that was going to come after all.
We're in the Loft 100 studios in beautiful, sunny Southern California. Wherever you're watching, wherever you're listening, as always, we appreciate you being along for the ride here. The ride, of course, is the Big Biz Show. I am Costa. That lady right there is Mary Burt Godwin.
That little lady.
My co-worker. Our exec producer is Greg Tollerado, and of course, Sully.
Have you done any singing this song?
Oh. What song is this?
It's a Mike Costa shuffle.
Oh, is it? I'm just gonna freelance?
No.
Freelance.
Freestyle.
No,
Or freestyle. One
freestyle. Freelance.
You are going to mouth
here we go.
words that Trace Rogers is going to rap.
Go, Trace, go.
Oh, okay, it's on me?
Yep.
All right, check it out. Ladies and gentlemen, welcome to the Sullivan's entries, the articles. This artist ain't audible. I started with the written.
You gotta move your lips.
That's a freestyle now means I didn't write it down. I put it down like this. Like a hand to a fist that just swings like this. Mike holds the microphone and it's hitting 2 times with the rhyme like this.
Wow. Thank you. So much. Thank you.
Trace is the best in the business.
Well, look at that. The 30% of Sullivan that's going to be playing at the Beach Life Festival.
I really say
I love it. I love it when Trace freelances. That is one of my favorite things on this show is when Trace freelances.
Listen, when we play in front of these 30,000 people, you need to come on stage with us and just block the drummer.
Perfect.
And just do that stuff.
Perfect.
Look who's with us, Jason Barry. The world's most handsome guest that we've ever had in the history of this program.
He's Mount
Mike's feeling a
Rushmore.
little awkward this morning. You feel, you're next to me every day, and Mr. Hair and makeup over there.
I know that.
You feel better? Jason, welcome to the program. Jason Barry is a real estate expert here in the city of San Diego. As you know, we're at 125 million homes across the country. We're also an American Forces Network and a Bloomberg El Financiero, Bloomberg EU. But we broadcast here in San Diego, which is arguably the worst spot to try to buy a house in the country right now. 2 things I want to talk to you about. Zen, you're a local sort of specialty property guy, right?
Yes.
You're in a higher, I guess, if you're listening to us from Opelika, Alabama, you're going to feel much better about yourself right now. What is the median price of a home in the areas like, let's say here in San Diego, you've got like a La Jolla, you've got a Del Mar, you've got a Point Loma, you've got Rancho Santa Fe, some of the higher. For the rest of San Diego, it's about $700,000, $800,000. In these areas, though, it's more like, what, $3-4 million?
A little more, actually.
No kidding.
What's interesting is, so if you look back to 2019, pre-COVID, right? Mm-hmm. We used to look at what is kind of the entry level getting into La Jolla, getting into Del Mar, getting into Rancho Santa Fe, the luxury communities. Those are some of the luxury communities.
Yeah.
And it was interesting, that was about 3 million back then. That it is escalated now to it's a solid 5.
Wow.
To get into a home that's a decent home, but you're still going to have work.
And the reason I bring up these areas is because you've got the same problem in Dallas, Texas. You've got the same problem in New York City. You've got the same problems in parts of Miami and other parts of the country. Why are these luxury areas becoming so sticky in terms of price point? Is it strictly inventory, or is it just the fact that people are making more money and there's more competition for these houses?
I think yes and yes. I mean, the reality of the situation, it's nice to go back and look at economics, right? Mm-hmm. Basic economic supply demand, so what you're talking about is right. Inventory's low, period. Yeah. So you've got, it's pressure on prices pushing up. But I think the other reason specifically, and you're right, you can bring up other areas like Dallas, you can bring up, Miami, you can bring up Florida, why so much of the wealth has gone down there as well. But I think you look at basic amenities, right? What is San Diego? What does it offer where we all are here? Right. First and foremost, I think it's best weather. I think we'd all agree with that.
It's not sports, I can tell you that, is it, Mike?
Still hurts.
Yeah, that's
so. Are we so for those folks that think about coming to San Diego or moving to California, is it really a lot about the weather? Because we're paying 80 cents more per gallon on gas for environmental fees. We're paying a premium just for the water view, right?
Right.
And then, of course, we're in the failed Republic of California in terms of politically speaking. I don't care what side of the political fence you're on. We're not a healthy state in terms of economics, but yet people still come here. How does that affect real estate for the average Joe trying to get this down?
Well, they're looking to answer that question. What you're saying is, why would they come here? And one is the weather. The other are the amenities, right? Or what are those amenities? Well, believe it or not, in those communities, it's safe. It's a safe, secure community. You've got some of the best education that's offered here. You've got fabulous amenities with restaurants, with outdoor lifestyle, and ultimately that's what people are doing, isn't it? They're looking for that quality lifestyle. I think all of us here probably have had the good fortune of being able to travel around the nation, maybe even the world, and I haven't seen a better place to live.
Yeah.
I feel so fortunate to be able to sell, live, and experience with my family in Rancho Santa Fe, in Del Mar, in La Jolla, realizing this is the area that we're selling and working. But I believe that is the reason why people are choosing to come here too.
Jason Berry, CEO, Jason Berry Team, Berry Estates, the website, jasonberryteam.com. That's B-A-R-R-Y team.com, and also berryestates.com. How long are properties staying on the market? I mean, are they going like that once they're listed?
And not only exclusive stuff, but overall.
Yeah.
So that's an interesting question and statistic. You constantly hear the news referencing to what are days on market. It's a little bit of a misnomer. Let me explain why. It never takes into account if a property is relisted. Many times these properties are relisted and all of a sudden it's reset on the market, right? So
because if I was going to sell a house and the thing's set there for 9 days, let's take it off for a minute and put it back on so it shows only been on the market for a day, right?
Correct. Correct. So there are those loopholes that people will play to go through. But when you're looking at, what Sully was talking about is the basics of supply, right? So if economic supply and demand, supply is low right now. Okay. So if the properties, one thing we're noticing is if they're being priced correctly, they're gone within 30 to 60 days.
My goodness. So for the rest of us, okay, that don't live in the $6 million world, what are you looking at in terms of market trends for 2025? Because look, we got bad news today. Yeah. For the first time, market rates are moving opposite of the Fed rate, where we've seen these mortgage rates that look like, because of the long bond, looking at 4 to 8% again. We were supposed to be in the other direction. Does that affect your feeling about 2025 overall in the real estate market?
It definitely does. I mean, before we were out there, let's say the beginning of the fall, much more optimistic. Now we're cautiously optimistic. It's interesting also that you saw supply was much greater in the beginning of the fall compared to the end of the year. So it dropped.
That drives prices as well, right?
Correct, but that was also optimism for the new government that's come in, right? So that's interesting. So I think there is optimism for business in that regard, and moving forward, more pro-business. Yeah. So I think hopefully that'll kind of counterbalance the rates, which is correct too. And so hopefully we're not going to see a scenario or situation or environment with which rates are going to be raised, but we will see, right? Time will tell. But right now, we are cautiously optimistic still, based on what we're seeing right now. The amount of demand that we have here is very healthy.
Real quickly, before you get to your question, does California set, fashion set in New York and goes west? Does real estate set in the west and go east by any chance?
I would say as far as prices go, I would say it definitely gets set in LA.
No kidding.
I think that is definitely a solid precursor there, in addition to the East Coast too. But then again, it's splintered, right? I mean, you have a lot of those people are going around outside of that too, and San Diego is a hotspot. Yeah.
So I have a horse in this race because my family home that I grew up in, my mom passed away, and it's up for sale, and it's a beautiful part of town.
It's a beautiful part of town.
Yeah.
Like one of the higher.
It's in Mission Hills, a beautiful view of San Diego.
Beautiful part of town.
If you look, it looks at the bay, it looks at downtown. I mean,
you can't get a better view. It's older though, because my parents weren't keeping it. And it was their style from back in the 80s.
Right.
Ethan Allen.
Yeah, and so I'm just wondering, we've heard a different amount of what is being priced at, and some people I would think just want to come in and gut it. But are people doing that? Lowering the price so that then they can go in and gut it and redo it themselves?
It's all relative to price.
Okay.
Right. So, for instance, they're looking at that relative to what else can they get at whatever the price is of that home. For instance, they're looking there, what else can you get for whatever the price of that home is compared to maybe some new developments, maybe out at 4S and Del Sur where you're getting some new homes, but then it's about location, right?
Then they don't have the view.
Exactly.
So these are pockets of San Diego. I mean, you guys are a niche market, and there's niche markets all across this country, and mom and pop guys. How do you compete with Berkshire Hathaways and Sotheby's and Caldwell Banker? How do you even compete with those guys?
Great question. The reality is understanding how the market works. And it's funny because there is another misnomer out there that you have, for instance, like you said, Berkshire Hathaway or Sotheby's, with thousands of offices all over the nation, right? So when I first got into business, it was very frustrating for me back in the 90s. I'd go out and listing appointments, and they would say, well, we are going to go out with Berkshire Hathaway because how can you compete exactly what Sully's saying with thousands of offices? It would frustrate me because what does that mean? I mean, I like to break things down. First principles, Elon Musk, right? What does that mean? That means to me, if someone's saying that to me, that means if they've got thousands of offices, you have thousands of offices working for you, right? Okay, well, is that true? I'd like to know the truth. So back in the 90s, I made calls to the other offices, not cross country, in Encinitas. And I said, hey, I'm
6 miles away.
Calling about your listing there in Del Mar. Yeah, you got the wrong office. That's what I thought.
Yeah.
I knew it.
Yeah.
So it was a misnomer, right? So then what I decided is let's go create something real. So that's what we did. We then traveled up and down the coast.
Authenticity carries the day as usual.
Yeah.
Jason Berry, the CEO, Jason Berry Team and Berry Estates. The website to find him is jasonberryteam.com. Also, berryestates.com.
You guys
are awesome.
You need to come back often. Will you come back often? Don't not go anywhere. Running out of here. He's trying to get away from
you guys are awesome.
That Funyun smell is what he's trying to get away from. Jason, Big Biz Show, bigbizshow.com. We're back in a minute.
Sunny Southern California. We are inside the Loft 100 studios. New year of the Big Biz Show. As always, we appreciate everybody being along for the ride, wherever you're watching, wherever you're listening. Hope your new year is off to a good start. I'm Costa, Marybert Godwin, Greg Todorov, and Sully.
David Garofalo, thank you. Day Trader Trio. James East. How was your holiday, sir? Did you have a good time?
It was beautiful.
You like it? Have a good time?
Very mellow.
Yeah?
Yeah.
Brian Jordan, did you play for any major acts this time around?
No major acts.
No, okay. Yeah. Trace Sojourn Hodgins, did you save your voice?
Saved my voice, but played with Rebecca Jade, so that was cool.
Hey. Favorite.
David Garofalo is the chairman and CEO of Gold Royalty Corp. One of my favorite guys. This guy's one of the smartest guys in the gold business, and they trade on the New York Stock Exchange. GROY is their stock symbol. And of course, he is the chairman and CEO of Gold Royalty Corp. You know, gold royalty companies are at the top of the food chain. They're basically finance companies for gold business. And David knows everything from A to Z about this stuff. David, great to see you, man. Thanks for coming back. Got to get you back in studio, man.
Yeah, Happy New Year. Nice to see you too.
Hey, can you talk about a little bit about what we're seeing with inflation? You know, since the election, you know, there's a lot of bright spots in terms of you know, it looks like new businesses coming into a lot of industries and so on and so forth. Then we get this horrible news that mortgage rates are climbing to 8% because they're going in the opposite direction of the Fed. Gold has often been talked about as a hedge against inflation. Can you help us understand where inflation stands right now, where you think it's going to be here in the next, let's talk about 6 months to 18 months, and are we going in the right direction or not?
No, it's very sticky. And I think gold is an accurate barometer of that. The long end of the yield curve, as you correctly pointed out, is an agnostic and accurate barometer of what's really going on with underlying inflation. So inflation rates are significantly higher than the headline numbers might indicate. You know, 3%, that's really fiction. It's economic fiction. It's not the reality on the ground. And gold is just reflecting that and reflecting the need, the desire of the central banks to continue to expand monetary supply because they've got so much debt to deal with at the federal level. There's no other way to deal with it other than to print it away.
The other thing too is, you know, as you have mentioned before, and some of your predecessors, Trey Wasser, for example, who we used to have on a regular basis, is the more money flow, the more money we dump into the system, inflation follows right after that, and it's almost a barometer where you can almost predict that gold prices are going in the right direction. I mean, for right now, I'm looking at gold futures right now are at 26.6290. Gold futures are crazy right now. In terms of that, if you were a betting man, the trend is your friend. This is the right time to get into gold and gold royalties at this point, right?
Absolutely. I mean, gold at 3,000 could happen tomorrow. That's an easy prediction to make. Mm-hmm. The question is, how far up will it go? And it'll be entirely a function of how much money supply will increase. And I think it's going to have to increase substantially more to deal with the massive amount of debt that the federal government has strapped on. And if you look at gold over a 50-year horizon from when the central banks actually eliminated the gold standard in the early 1970s. It's been a one-way trade. Gold's gone from $35 an ounce to $2,800 an ounce today, whereas the purchasing power of the U.S. dollar has declined by over 96%.
David Garofalo, the chairman, CEO, Gold Royalty Corp. Their ticker symbol is GROY. David, as far as the new administration coming in with President Trump, is there any hope on your part of being able to possibly drill in areas that maybe you weren't the last 4 years?
Well, I think that, bodes well for mine development generally, but the lack of exploration over the last decade means that even if the regulatory regime improves, we're not going to see the evidence of that for at least a decade or so, because typically the timelines from discovery to first production are 15 to 20 years. And the lack of access to capital for the juniors in our space, all the explorers, the ones that do all the heavy lifting, the grassroots exploration that we need to continue to perpetuate our industry, simply hasn't been happening for the last dozen years or so. So even if the market has opened up for those junior companies and they made significant discoveries tomorrow, we wouldn't see any mine supply reaction for at least a decade to 15 years.
Now, David, we've been talking about the industry. How does Gold Royalty specifically benefit from the increase in gold prices?
Well, look, we have optimum leverage to the gold price. We have unmitigated leverage. In fact, all of our revenue is really from the top line at the mine site. We get a percentage of the gross revenue. So it really doesn't matter what happens to their operating capital costs. Our margins are 90+% because we have very low overheads. We're effectively a financial institution, as Sully pointed out earlier on. We're a bank that provides capital to the explorers, the developers, the operators, who otherwise have been able to access capital, as I said earlier on, for the last dozen years or so. What we do is provide that capital to expand and explore their properties while we take a royalty back in return as repayment.
Hey, David, before we let you out of here today, I want to talk about how you guys compare to other gold royalty companies, because this is what's really impressive. That's why I love your company. That's why I beat up his phone lines when we're off there to try to get him to come on more. But you guys really do. You are leading the sector. In the last count, what is it? 240, 220 royalties. What are we looking at right now?
Yeah, 245 royalties, but I think most importantly, there's a couple of characteristics of our portfolio that really are standouts. One is over 80% of our portfolio is in 3 jurisdictions, Nevada, Quebec, and Ontario, which are the best jurisdictions in the world for mineral potential, low political risk, and low regulatory risk. But also, 3 of the 5 biggest producing gold mines in North America have our royalties on them. And so not only do we have quantity and diversity of the royalty portfolio, but we also have some foundational cornerstone assets that are going to provide annuities for our shareholders for decades to come.
The thing you're looking for most forward to in 2025, in as much as you can share with us as the CEO of a public company, what are you looking forward to in terms of your company and of course gold as a whole?
This is our inflection year. We only started business a little over 3 years ago. March of 2021 is when we IPO'd with no revenue. This year, we're free cash flow positive for the first time in our history. So we've reached that inflection point where we're generating positive free cash flow. We don't need to go into the market, raise money. That means per share value accretion through cash flow earnings for the first time in our history, driven by some of the biggest assets in North America.
David, always appreciate the visits with us here on the Big Biz Show. Always gives us hope for the gold future. Appreciate the visit. We'll have you back on again soon.
David Garofalo, GROY is that ticker. Gold Royalty Corp. I feel better now after talking to Howie earlier today about the Sam.
Yeah, that's
big time.
Thanks, David. David brought us up from the Howie conversation.
Yeah.
All right, keep it here. Lots more with the Big Biz Show right after this.